Welcome back to Good Day Live, everyone. We have a lot of fun on this show with our entertainment updates and tech talk, but every once in a while, we really sit down and take some time to get a few life lessons, including how to deal with our taxes and understand them. So today, our tax angel, Lori Carpenter from Stadler and Company Tax Services, is here to help us take a deep breath and work through our tax knowledge and anxiety. Hey, Lori, thank you so much for coming back to visit me.
It's so good to be here again.
I feel so much more calm every visit that we have. I'm becoming an adult. You're helping me a lot. So today we are going to play the tax game that you guys have set up at Stadler and test my knowledge. So hopefully I don't make too big of a fool of myself. You guys can find it at home at playtaxgame.com. Right?
That's right.
All right. Yep. So we are going to go through each random thing here and there. So let's first talk about first-time filers. So I would assume that if you're a first-time filer, you need your W-2s.
Definitely.
And that would probably be the only thing that I can remember. I'm not a first-time filer, but that's probably the first thing I can remember.
Right. So if you're going to somebody to prepare your taxes, you'll also need your ID, your Social Security card. You definitely need that Social Security number, whether you're at a preparer's office or not. Possibly your birth certificate, depending on exactly what you're claiming. But definitely your W-2s and any other sources of income. So if you had a 1099, if you had interest from your bank, you may need items for each of those.
Okay, awesome.
Yeah.
All right, next life event, let's click on freelancers. So if I was a freelancer, what exactly would I need? Because I don't know anything about this subject.
Well, you were talking last week about doing some work for BuzzFeed.
Yes.
That's freelancing.
Nice.
Okay. So you have freelanced, and if you're a freelancer, you will probably receive some 1099s that we talked about, the NEC, and you need to make sure that you are claiming all of your income. One of the things, if you have a lot of income and that's your only income, you may be subject to self-employment tax, and you definitely want to make sure that you're looking at that throughout the year rather than at tax time, because you could have a huge tax bill if you're not careful.
Okay, that's definitely a good note to keep in our back pocket. Now, as we get older and we want to, start making some money, let's click on investment properties and see exactly what we would be dealing with.
All right, so if you have a rental property where you want to have some income from it, you definitely want to keep track of both your income and your expenses so that you can claim those on your taxes, because those expenses will reduce what you have to pay tax on.
Okay.
If you're going to flip a property, depending on how many properties you want to flip, you might have self-employment tax or you might not.
Okay, because that's really starting to be a really big thing. People flipping properties and owning properties, another thing that makes you an adult.
Right.
So let's talk about child tax credit.
Okay. So do you know anything about the child tax credit?
I know that if you have kids, it's a good thing for your taxes.
It is. That's exactly right. So if you have kids who are 16 or under at the end of the year, there's a $2,000 credit per child. So that can add up pretty quick.
All right.
There are other credits that go along with that, an additional child tax credit if you don't need all of that to help pay your taxes off. And there are child dependent care costs and lots of other credits that can potentially be added on when you have children.
Okay, sounds like the only downfall of me not having any kids right now.
Well, it does cost more to raise a child than you're going to get on the tax benefit.
Very smart lady. That's why she's teaching us. Absolutely. So now let's talk about, unfortunately, we get married and we get divorced. So let's click on that. I don't know anything about this credit.
So sometimes people forget to look at their withholding. So if you are filing married and then you get divorced, you're going to be single that next year. And if you don't change your withholding, you could have a big tax bill because that withholding is different for somebody who's married than somebody who's not. So that's certainly one thing you want to look at.
Okay, so there's a stark difference, just married and single. There's no divorced box that we should be checking.
There's not a divorced box.
All right. Once you get rid of them, ladies, you are done. All right. Let's now talk about Social Security.
One of the things that I have found, well, you're obviously, I don't think, drawing Social Security, are you?
No, ma'am.
Probably not thinking about that for a while.
Yes.
Right. So anything else you know about Social Security?
I do know it's for just, older people to kind of, once they retire, right?
Mm-hmm.
Okay.
Right, so you have to be at least 62 to draw Social Security itself. And when you do, I have found that a lot of times the Social Security Administration will tell you it's not taxable. That's true sometimes. So if Social Security is the only income you have, number one, it's not a whole lot, so hopefully you don't have any debt. But it won't be taxable. If you have another retirement account that you draw from, it's probably going to be partially taxable. So it's something to know. That it's not just free money coming back to you.
What about the money that we have put in our savings?
As far
and we
as
start living off of that as we're older and things like that, that isn't taxable.
So if it's money you've already paid tax on, it's not taxable again, usually.
Okay.
If it's money you haven't paid tax on, like a 401k or a traditional IRA, it is going to be taxable when you draw it out.
Okay, awesome. Okay, that's another thing we need to keep in our back pocket.
Right.
All right, guys, surprise me with the random next one. Trust tax credit. Trust tax return, I'm sorry.
So do you know anybody who has their assets in a trust?
I don't, but I, hear conversation about trusts, and they are a good thing to have, correct?
They can be a good thing to have. There's so many different rules about it, and there's so many different kinds of trusts. It can go either way, and sometimes, on occasion, they can be harmful if you're looking at end-of-life trust, but oftentimes they help to transfer your assets without having a big tax bill.
Okay,
Yeah.
Okay. Well, Lori, how do you think I did?
I think you did pretty good.
I'm not a total klutz, but...
Well, for talking about things that you haven't experienced in life yet, I think you did pretty good.
All right. Well, thank you. As long as Lori thinks I did okay, I think that I am okay in life.
For sure.
Especially when it comes to the tax credits and things like that, because she is our expert. Thank you so much, Lori. Can you tell everybody where they can go to get more information on Stadler and Company Tax Services?
Absolutely. So we have a Facebook page at Stadler and Company Tax and Accounting. We also have StadlerTax.com, our main website. And then, of course, today we talked about PlayTaxGame.com. They can go there and test out their knowledge on those subjects.
Absolutely.
And we have said you can pick one section that applies to you and just look at all of those. Or you can play through the whole game, and there are some hidden codes for some coupons in there.
Yes, it's definitely helpful because like we said, I didn't know everything. But you definitely gave us a lot of information. And you're going to come back next week, and we're going to talk about some charitable donations and any credits that we can get off of that. So Lori is going to be back with us next Tuesday, guys. So you better stick around. Thank you so much for coming, Lori.
My pleasure.
All right, guys, we'll be right back with more Good Day Live.